Welcome to Markets Today. I'm your host, Mbithe Mwema. It's the beginning of a new month, the month of June, and as always, we're here to try and get a sense of what happened in the previous month in terms of the trading sentiment, trading volumes, who gained and who lost over that month. We are joined by Mr. Martin Muregi. He is a senior research analyst at Standard Investment Bank. Welcome to the show, Martin.
Thank you for having me, Mbithe.
What happened in the month of May on the NSE?
A bit of a slow month, given that April we noticed a lot of uptick as investors took advantage of their low price points. So May there was a bit of profit taking, especially on bank stocks. So generally the market was down just a tad, a bit 1.8%, not too bad, but basically due to bank stocks taking a dive. Yes.
Okay. So what was volume like? What did the indices perform? What was the performance for the indices in the month?
So the NSE was down 1.8%.
Okay.
Basically the market. NSE 20 0.5. I'm never fond of looking at NSE 20 because of obvious reasons.
Safaricom.
Exactly.
Okay.
And given that it's a price weighted index, and you know what is happening with Bamburi, NMG, which is a large cap BAT as well. Mm-hmm. So that is having a negative impact on the NSE 20.
What's happening with those three stocks?
NMG, they already issued a profit warning,
yes,
which I think it's not. They said it's COVID related. Okay, yeah, there is a touch of COVID related, but we all know how the revenues of NMG already were on a downward spiral from a couple of years back. So they already issued a profit warning. Bamburi, we see what is happening on the construction sector, real estate. We'll take a dive, and they've been hit on that front as well. BAT, last year they already closed year to date on a negative. Right now it should be around 300 shillings. There's a time BAT was at 1,000 plus.
Wow.
So shows you the negative sentiment surrounding BAT, especially with all the regulation and things of the sort. Yes.
Okay. And what was happening with turnover for that period? I can see. All right.
$136 million.
Yes.
A bit of an uptick from 117. Foreigners came into the foray and locals as well. But foreigners are still negative. They're still bearish on the bounce.
Okay.
Which it's a continuation from what happened in Q1. And I think kind of makes sense given the macros that we are currently experiencing and the fact that the fundamentals of companies are going to take a hit. Yes.
Okay.
So them being bearish kind of makes sense. Yes.
So by bearish, are they continuing to sell out of key stocks?
Yes.
Okay.
Okay. The beauty about it is that in as much as it's negative, there's still some inflow coming in. It's not as in they're dumping stocks,
yes,
basically.
Yes.
So they're still selling to fellow foreigners, but you notice that at the end of the day, it's a net negative position.
Okay.
Yeah. So you'll have, let's say, 90% buy selling, and then you have 80% buying.
Okay.
So, but on a net basis, you're still on a negative, but there's still no dumping the stock per se.
All right.
Yes.
Okay. So we can walk through the top 10 gainers. I see Kenya Airways is up there on your report.
Yeah. It's I actually I can't mention too much about KQ.
Okay, all right, fair enough. Fair enough.
What a performance last month!
Yeah,
Yes.
what a performance!
What a performance! And at 148.3 end of the month, that is after it took a dip of over 20%.
Yes.
In Friday last week.
Okay.
Because that's after they released the FY19 numbers.
Okay.
So
that's a close conversation for you, so we can't really get into
much,
that.
Yeah.
What about we saw Home Africa 31% up, Flame Tree? It's really the small caps.
It's small caps.
Everready, Capturo, Chumi, CIC, and I can see from your report the turnover in this particular stocks, it's negligible.
Absolutely, and I think I've come here before and say that I barely look at small caps.
Yes.
Because the turnover, just the volumes are so tiny, and what happens is that just 100, 200 shares can be traded in one day, and then the stock goes up 10%. So, and liquidity of those stocks are very, very tight.
Okay.
So I barely look at the small cap counters.
Okay.
Yes.
Fair enough. And I can see also from your report the top 10 losers as well. Bank of Kigali.
Yeah.
That's down 18%. What's really happening there?
There was a block trade, and it was after the dividend payouts. I haven't dug into their numbers yet.
Okay.
But I remember there was a block trade, and actually it really dived after there was an increment in dividend, yet the dividend payout, yet the stock took quite a big hit on the following day.
Okay.
I need to go ahead and dig out further what exactly happened.
All right.
Aside from that, the only other counter that sticks out is DTB in the month. It was down 14.2%. Right now, DTB is a 10-year low. Okay.
Wow.
So the thing about DTB is a pretty interesting bank stock, because at current price, it's basically trading at 0.3 times NAV. Okay,
Wow.
FY19 NAV. Honestly, that's really cheap. Like,
Is it cheap or is it a value trap? Because then why is it trading at a 10-year?
no, that's a good question, because now from that perspective, the different perspective is their business model. The business model has took a hit from when the rate cap came into place, and is still there because they rely too much on wholesale funding. Okay, that is a lot of purchase funding. Their cost of funding is really high. You're talking about around 5%, 4.55%. It's like a tier 2 bank, all right? And then now when it comes to now, the lending were capped, so their margins were basically squeezed. And then you look at, can they diversify the client profile? We all know that they have a sort of a niche market. Now the question is, how much can they expand in that niche market? So from a valuation perspective, the multiples are just so lucrative, and they are sitting on a huge capital base. They have tier 1 capital ratio of close to 20%.
Wow.
So they're pretty liquid. They're pretty strong capital base.
What can they do? Because the bank's operating in an environment where you won't lend.
Yes.
Because of the high incidence of non-performing loans,
Yes.
which is what we've seen from the first quarter numbers.
Yes.
It's
Not yet.
Not yet. We haven't
Actually,
even fully.
we haven't felt
We even
anything.
crystallized that.
We haven't crystallized nothing. Yeah.
This bank won't pay that money out as a dividend unless it gets into an acquisition mode.
Now, that's a good... I did a stress analysis on if NPLs for banks were to be written off. So, and if a bank is going to write off, it's going to write off its own capital, all right? So when I did a stress level, in case even NPLs increased by 30%, let's say this year NPLs increased 30%, and then I use the audited accounts for FY19, they're stable. They are so stable because of the huge capital they have. They have such a huge capital buffer. So I have a feeling by the way they might surprise guys and increase the div. I have a feeling because they're no longer lending. Okay, the risk appetite is going down. I don't see the risk, the environment becoming any conducive for lenders to be aggressive in asset allocation. So, and banks are adopting defensive strategies. So why hold all that capital, honestly speaking?
Why would you want to hold such a stock if they can't allocate capital better than you can?
The multiples, man. As in, it's 0.3 times. So why would you buy?
You have to convince me. You can't tell me that I'm buying a stock because it has nothing better to do than to pay me a dividend because of their high capital ratios. Because it means that there's probably something flawed with their business model.
But here's the question. What about the valuation? Can't you go ahead and buy a stock simply because the multiples look so lucrative? It's not just about... It's being undervalued more than what the market should do. If right now, equity is trading at... Okay, it always trades a higher multiple, when 2 times multiple and things of that sort, around 1.5, 1.6. KCB around 1 times multiple, all right? So the whole banking industry is trading around 0.9, 0.8 multiple. A bank is trading at 0.3 multiple. Come on, be there. Yeah, I think time will tell. Time will tell. Honestly speaking, time will tell.
Okay.
Because I think those multiples are so... it's been oversold in my view.
So for you, you're a buyer.
For me, I'm a buyer.
You're a buyer. Is that one of your top picks?
Yes, and Yes, it is purely from a valuation.
From a valuation
perspective. From a
perspective.
valuation perspective. Yeah,
Okay.
not business model wise. I've never been a fan, especially, and then given that they're not NFI contribution is really low. It's your low high 20s. Okay, where we need a ratio of around 35-40%. They are 27, 8, 9%. So business model perspective. It's a bit shaky.
It's a bit shaky.
Valuation, come on, man.
I'll put an asterisk there, but
Okay,
all right. So
okay.
Diamond Trust Bank, then there was a bit of movement, downward movement on Standard Chartered.
Yes.
That was down almost 12% for the month.
Yes, Standard of last month they issued the statement that the div payout that was to be done on 20th of May is not going to be done. I don't think those guys will pay a dividend.
Oh yeah.
I don't think they will. I honestly don't think they'll pay a dividend because if they were to, they said because they didn't hold the AGM, it didn't make sense. So I think they won't pay a dividend in my view. I think they will need to preserve capital. And that's the theme right now, preserve capital. But in case you have excess capital like DTB, why stick with it? Have you seen what I've done there?
I would not touch a bank with excess capital in this because it means there's something anyway. But that's fair enough.
But here's the thing: the payout ratio has been really conservative. DTB had among the lowest. The dividend yield was the lowest, 3%. All right. So they're really holding capital for such a long time. And honestly speaking, they weren't doing much with it. All right. They weren't doing much. So right now, which is the best time to go ahead and can I use excite the market for that matter? Why would you've been holding all these, their payout is around your low 20s, among the lowest, that and NCBA. I think they have the lowest payout ratios.
So then there's some, I think what I would actually, you've triggered a thought process for me, is to just try and understand the current business model. Are there spaces where they can start to extend credit, maybe some of the businesses they're affiliated with, if they get into a growth trajectory and there's capacity and need for it?
Yes and no, because they're so tilted on your manufacturing, real estate, trade. So
it's still
iffy in those line segments. I think that those the clients who like right now who are all, let's say, in manufacturing sector of this niche. They've come up with ways, they have remodeled their business to take care of the COVID, to be in this pandemic situation. There's competition for that client. Every bank will be knocking on that client's door.
Fair enough.
All right? Yeah.
Fair enough.
So I'm not too sure about that side.
So we'll leave, the jury is out on that. You're a buyer?
I'm still a buyer on that. Long term, honestly,
we
will talk.
We will talk in a year's time. The way we've talked about Nation Media. Okay.
Yeah, one down.
One down.
One down. You have one on me. It's fine.
So the top 10 foreign net inflows. So you certainly have a point there. Diamond Trust Bank attracted the largest inflows. Yeah.
I am not surprised.
You're not surprised by that?
I'm not surprised. I think it's those stocks that all of a sudden you have. Is this oversold? You can't have a bank trading at 0.3 times.
Okay.
If later you're going to acquire that bank, honestly, which multiple are we talking about?
Okay.
We just saw a bank. We just saw CIB getting into the Kenyan market. I'm paying a bank 7 times multiple. I still can't believe it.
Okay, almost. But let's take a quick break, then we come back and continue discussing the net inflows into the Nairobi Securities Exchange.